Welcome back. Well, the markets are holding on to mild gains, but a lot of stocks actually are doing a thing of their own. So let's talk about the chemical space now. The sector has performed, amid the geopolitical uncertainty. We'll also get a sense about what's the impact on supply chain and how is demand shaping up for the remainder of this fiscal. To help us out with that, we're joined by Suyog Kotecha, the Executive Director and CEO of Aarti Industries. Hi, Suyog. Thanks a lot for joining in. Well, you had a brokerage note that came in earlier this week, and they said, that's MK, they say that the US tariff situation may create new opportunities for a company like yours. Would you agree? If yes, in which sectors are you observing this?
Yeah, I think let's take a step back. I think we're just coming out of unprecedented quarter, and given you started by saying sort of understanding impact on supply chain, I think it's very rare that within a quarter we have seen multiple significant geopolitical events. Starting with U.S. tariff announcements on first week of April, followed by India's counter to terrorist attack in Kashmir, then flare up of Iran-Israel, and then pause, and then renegotiation of U.S. tariffs to the multiple countries in the world. So I think with that kind of movements, supply chain shocks are quite real. Right. I think we have seen raw material volatility where, going down by 20%, going up by 15% in same quarter, which is quite unprecedented. Even from a physical supply chain point of view, right? For example, Kandla port, from where we export significant quantity of our products, was shut during the mid part of this quarter. And till date, the congestions are quite severe. So a lot of shipments getting delayed, having an impact on freight cost. Even the June Middle East flare-up saw a lot of shipments going from Middle East to India to US getting significantly delayed. So I think all of that, I think the industry, especially the export-oriented sort of companies, continue to manage this volatility. As we look forward, I think many of these aspects are settling down. There is one major event that we are yet to see, which is what you referred to in terms of what happens to US-India trade deal, and in general, what US does with sort of reciprocal duties beyond 9th of July. And if that settles in favor of sort of India versus rest of the world, we will definitely see demand pick up. But at this point in time, I think customers are waiting to get full clarity. And sort of, we expect that clarity to emerge in the next couple of weeks time frame.
Yeah.
But today is difficult to make that judgment call.
Yeah. So, Suyog, obviously the freight situation is very, very difficult. But do you think it's creating a bit of an opportunity for some of your products? More tariffs come about from other parts of the globe as well. The tariffs could be relatively higher. Do you see it creating an opportunity in an adverse situation?
In a mid to long term, yes. Right. I think in a mid to long term, we had described this in our. There are some chains where we compete head on with China. I think in those chains we saw pickup in demand in US. And as I said, if it gets settled in favor of India versus China, we will definitely see pickup in demand. But at the same time, in near term, we do see this volatility impacting in terms of customer taking decisions, because I think businesses like certain environment, right, to make business calls. And when that certainty is missing, when that clarity is missing, we also do see people holding off from making decisions from a large, year-related volumes or multi-year contract kind of situations.
Suyog, hi, Rima here. Some of the MNC agrochemical companies are still cautious when we chat with them about calendar year 25, calendar year 26. And considering a big chunk of your revenues coming from this sector, give us an indication. I know you've got an EBITDA guidance of about, I think, 18,000 to 22,000 by FY28. Tie in your, aggression, what you see, versus what we're hearing from your MNC counterparts.
No, so I think even our outlook is quite consistent. I think everyone has been talking about sort of volume-led demand growth, but I don't think any one of us is budgeting for margin increase at this point in time. And that's what we also hear from our agrochemical clients. I think a lot of stories around inventory buildup, and in that context, correction in the overall pipeline is kind of done for most of the value chains. And in that context, we see volume-linked growth coming, but it is coming at a relatively significantly lower margins compared to where it was, let's say, 2-3 years back, given kind of demand-supply imbalances we have globally. And that's the story we continue to hear. That's the story we continue to observe. So we continue to see demand growth, but at a relatively stressed margins.
I think your FY26 Capex was about 1,000 crore, and the second half of the year will see the staggered commercialization of Zone 4. So which products will be available first? How would the revenue accretion? And I think after that, you're going to be focusing a little bit more on the balance sheet because a chunk of your Capex would be done by the end of this fiscal year.
Yes, so I think that's right. I think this year we will spend around 1,000 crore of Capex. And a part of that greenfield site will get commissioned this year. Most of these products will go into agrochemical, pharma, and coating sector. But the real benefit of that site will start coming in sort of subsequent financial year, right? When we commission the full site and we ramp it up also to decent utilization levels. At this point in time, I think during this year, the capacities that we commissioned last year, our expanded ethylation capacity, our expanded nitrotoluene capacity, and our expanded MMA capacity, I think we remain focused on sort of utilizing those capacity to the full extent possible. The new Greenfield Zone 4 will start kicking in towards the end part of this financial year, but the real benefits, we should be able to start seeing it in the next financial year.
Suyog, thank you very much for joining in. Short conversation today, but we'll chat when the numbers are also out. Thank you once again for joining in.